Well, our crypto strategist, Sean Farrell, still writes about the 4-year cycle. And it probably doesn't matter between now and the end of the year, because in any case that we should be seeing a lot of strength. But I would say that the real test, there's really 2 tests that will come up. Is one, is Bitcoin going to follow a price cycle next year, which would be a downturn? And is Bitcoin going to diverge from the equity markets next year? And I think that there's a chance that both take place, and that's why we'll be talking less about a cycle, because as you know, Bitcoin also historically followed equity markets pretty closely too.
Tom Lee, Fundstrat CIO and chairman of BitMine, has once again stepped into the spotlight with another bold prediction for Bitcoin and Ethereum. And if history is any guide, Lee's voice carries weight. Remember, he was among the first on Wall Street to publicly argue that Bitcoin would thrive despite skepticism. His thesis today? It all comes down to interest rates and liquidity. As the Federal Reserve gradually cuts rates, more liquidity will pour into the system. Historically, every wave of increased liquidity has acted like rocket fuel for Bitcoin and the broader crypto market. In simple terms, when money becomes cheaper, risk assets like Bitcoin soar. But Lee takes it even further, pointing to AI as the new driver of global financial transformation. Artificial intelligence, according to him, is not just an innovation, it's a revolution that will ripple across every market. From capital allocation to trading strategies, AI is accelerating adoption and reshaping how institutions view Bitcoin. If AI is rewriting the financial playbook, Bitcoin could become the prime beneficiary. His conviction? Even in the face of uncertainty, these combined forces, falling rates, rising liquidity, and AI's disruptive power, could push Bitcoin and Ethereum to levels no one imagined, regardless of market cycles. But let's flip it to you. Are you as bullish as Tom Lee? Could Bitcoin and Ethereum truly ride these forces into uncharted highs? Drop your thoughts in the comments, hit like, and share this with someone who needs to hear it. And don't forget to subscribe. We bring you daily insights into Bitcoin and the crypto market. Now let's get more insights from Tom Lee.
Foremost, I've seen those charts with global central bank liquidity and Bitcoin, and Raoul Pal, I think advances at 16 months, and it's been pretty dead on in explaining crypto. And so I would say that in my mind, it's intuitively logical that global liquidity is a reason why crypto prices do well. Okay. But I think there's a second story arc developing in crypto, which is that was also true when the singular narrative for crypto was, well, it's digital gold, or it represents a vector of trust or of risk appetite, plus it trades 24/7. And so that's why we want to look at it. And maybe that's why people look at it and describe Bitcoin. But now I think that the narrative is changing for a couple reasons. One would be institutional sponsorship of Bitcoin plus government sponsorship. To get you a template on that, look what happened to venture capital and private equity. Venture capital used to be very predictable cycles, and private equity too, because it was primarily family offices buying it and selling it, and it was very short cycle, and they couldn't, they never really raised a lot of money. The minute it became an institutional sector, it has completely transformed the cycle in venture capital and in private equity. There hasn't really been a private equity cycle since you've had institutional flows into the private equity sector. And now private equity is larger than cash equities. But I think the second story arc is that AI and adjacent to it is financial innovation. Like, these two really huge story arcs are starting to take place. Like, AI is such a big deal because it's, for the first time, it's creating worker equivalents. That means you're not only relying on demographics to drive labor force growth. And at a time when the financial industry now has the green light to really reimagine itself. I mean, as you know, the financial industry's biggest cost is humans and money of their endeavors, right? It's the biggest expense is compensation expense. You don't really have to pay a robot bonuses.
Sure.
And a lot of that is going to be running, and especially because of the need for both authentication and really shifting trust on blockchain. So I think that is why I think there's credibility to the idea that we should still respect the cycles and central bank liquidity, but now I think that crypto is really breaking into much more meaningful use cases.
Yeah, we broke a new high just before this interview, minutes before this interview. Just back to kind of finalizing the AI discussion, talk about the proof of identity becoming more and more important. There's just an important statistic or interesting statistic. Last year, 50% of internet traffic was bots. 50% of internet traffic. And that was last year. I can't even imagine what it is now. And out of these bots, 32% are bad bots and good bots are 17%. Which goes to your other point that you were talking about briefly earlier, is that when you said there's an 80% likelihood of a kind of a utopian outcome from AI, now you got that 20%, which we didn't touch on, that shall not be discussed today, which is a whole other discussion. But then you talked about one of the killer use case for crypto is stablecoins. I think is no arguing that. There's other use cases. Gaming is really interesting. I think you've talked about that before. And AI is probably the most exciting to me. But looking at stablecoins, why would the ETH win this war? You got TON, you got Tether just announced the launch of Stable a few weeks ago. Why do you think ETH will be the king there?
Well, okay. I'm kind of working a little backwards, but so I'm just going to give you some round numbers, and you guys can correct me if I'm wrong, but US dollar is 27% of global GDP, and it's roughly 55% of central bank reserves. And it's like 80% of financial transaction pair, like more oil is quoted in dollar than other quotes, and like stock prices are quoted in dollars. But in the stablecoin world, the US dollar pair actually in crypto transactions is like 99% dominance. Almost everything in crypto is quoted in dollars. So really, when we think about the future stablecoin, it's really the dollar becoming the stablecoin of choice. And, that's because everyone likes getting stuff quoted in dollars, and people like to use dollars. I mean, whether it's a merchant in India or Turkey or someone in Dubai buying real estate with, actually Tether. So if the dollar is the quoted pair in the future of stablecoins, then the market share that we've seen up until this date might shift. Because as you know, 80% of stablecoin transactions do take place outside the US. And it's been mostly Tether. And Tether on Tron or Tether on other coins, on other blockchains. But I think that the U.S. government wants to have a say in this stablecoin future. And so I think it's going to be more about compliant blockchains where the dollar stablecoin is going to be allowed to operate. And that's my guess. So, and if Treasury Secretary Besson is right, and it's a $4 trillion market, which is $4 trillion owner of treasuries, like literally the U.S. will never have to worry about funding its debt. I think they want
That's another Japan and China twice over.
Yes, exactly. Yeah. I mean, you can see how big it is, right? Like, you'll want it to be running on ETH.
That's digital asset treasury. So it's a concept that for me was, when I first heard about it, I'm like, it doesn't make sense. Like, it made me realize, like, in the early days of crypto guys were just tokenizing everything they can. And now it's like we're turning tokens into equity. So just for the audience that's not deep into crypto finance, what are digital asset treasuries? How would you explain it to them?
Yeah, in simplest form, a digital asset treasury is an equity. Like, so someone has a Robinhood account or a Charles Schwab account, and they can buy a stock that owns in that company's treasury a crypto token. So in other words, MicroSailor is an example. Like when you buy MicroStrategy, you're basically buying Bitcoin. And that's because they are using all their excess liquidity to buy Bitcoin. many people will say, Tom, why do we even need to own a MicroStrategy when I can buy an ETF? Okay. The answer is really comes down to two simple things. Number one, the institutional equity world, when a fund manager is trying to outperform or find alpha, they're unlikely to be buying a Bitcoin ETF. So their only way to get exposure to Bitcoin is to buy infrastructure companies related to Bitcoin, but the simplest is buying MicroStrategy. And that's why MicroStrategy, in terms of Bitcoin held, is actually bigger than any Bitcoin ETF. I believe, or maybe they're second to BlackRock, but they're basically larger. But the second reason is that a properly run crypto treasury is growing your holdings of the crypto faster than an ETF, because an ETF by nature doesn't grow your ETF holdings, your token holdings. MicroStrategy calls it levered Bitcoin. But I'll give you an example of how their math worked. When they started their crypto treasury in August 2020, MicroStrategy had $1 worth of Bitcoin per share. The stock was $13 at the time. By the time you got to July 2027, so roughly 2025, 5 years later, they had $227 of Bitcoin held per share. So they grew it by, hundreds, multiple. The price of Bitcoin from August 2020 to July, let's say 5 years later, went from 11,000 to 118,000. So it was an 11 times return. MicroStrategy stock went from $13 to almost 400. So it went up by more than 30 times. Only 11 times was explained by the Bitcoin price increase, which means their treasury strategy, which was properly executed, had an implied benefit of a 20x on the stock price. So a really well-run crypto treasury is going to be a really high-performing stock. In fact, Michael Saylor just posted a chart, since 2020, he's outperformed every single stock of the Mag 7. He's even outperformed NVIDIA during that time frame.
We're sick of living in a fiat world. We want to raise capital. We will use that capital for the debt. All the free cash flow we'll produce in the future will go back into the debt. That's probably 3.0 coming ahead now. Would that scare you, Tom? I mean, because a lot of people are getting bored of, the pure plays, and they want a little bit more variety, something new.
Like MicroStrategy is really the king of velocity, right? They've grown so much their Bitcoin, and that's why they still trade at a really good premium. I mean, them and Metaplanet, let's say. So I think it's ultimately like the oil business, and people trade on reserves, and then the companies that can grow their reserves get a higher multiple. And Exxon and Chevron always traded a premium to their reserves, but Exxon was the largest stock in the S&P from 1995 to 2018. Okay, almost a generation for us as an investor, and it never traded on earnings. So I think DATs, like the more DATs out there, it's more like MLPs and EMPs, but you're going to then pay premiums for those with good execution.
If I put you on the spot, on the hot seat, where do you see crypto in the next 6 to 12 months, looking at Bitcoin, ETH, and the rest of the market?
Yeah. Well, I'm still really bullish on Bitcoin. I think between now and year end, I think it's still possible to be 200,000, and longer term, 1 million for Bitcoin. Ethereum, I think, has more upside because and that's why we call it the biggest macro trade over the next 10, 15 years, because of both Wall Street building on the blockchain and AI as well. So you have like sort of two cohorts actually probably deciding that it's really additive, right? Remember, the financial system is half of the economy. And in the stock market, financials are trading at a lower valuation than tech. So I think financials can re-rate in that world. But Ethereum is sort of network value beneficiary. So I think Ethereum between now and year end, let's say Bitcoin is 2x upside from here. I think Ethereum is more than 2x upside from here. But longer term, in the BitMine presentation, we pulled some work from Mosaics, and let's say it's 5-year view for Ethereum. It comes to around $60,000 per ETH. So a lot of upside in the next 5 years.